Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So first of all, as we go into a new week, we've seen another strong close here on Friday for gold, and of course congratulations to everybody who caught that dip at the beginning of the week, where we had that usual counterflow for gold on the Monday, broke down to $1,704 per ounce. Subsequently, we've broken out to $1,744 per ounce there on Friday. In fact, we've now banked another position on gold there, banking 530 points on Friday, and we also have over 450 pips of profit on the currencies running as we go into next week, which we discussed last week, where we had a bias for dollar long positions, and with that we were looking for pressure to the downside on the euro and the pound. Now, coming back to gold here, on Friday we saw a statement from Goldman Sachs where they have updated their forecast over the next 3 months, 6 months and 12 months for gold. Their targets have been adjusted as follows. So over the next 3 months, Goldman Sachs are looking for $1,800 per ounce gold. They have forecast $1,900 per ounce for gold over the next 6 months, and $2,000 per ounce for gold within the next 12 months. Now, this is quite a significant shift from their previous estimates, which were $1,600, $1,650 per ounce, and $1,800. We've also seen a significant shift from Goldman Sachs in their forecast for silver as well. They're now looking for $19 per ounce silver over the next 3 months, $21 per ounce for silver over the next 6 months, and $22 per ounce silver over the next 12 months. And where we have silver right now is trading at $17.61 per ounce. So we've got some fairly strong and bullish forecasts there from Goldman Sachs, and this lines up very nicely with the data that we're looking at the moment as we transition into next week. We have seen hedge funds and money managers, they've increased their net long positions again in the latest week here for both gold and silver, and we're moving into a very interesting time here as we move into July, August and September, which typically are very strong months for the metals. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into next week. First of all, moving over to gold, you can see here where we closed at $1,742 per ounce on Friday. Gold up 1% on the day, and you can see very clearly where we're at a neckline here, and we've essentially been consolidating on gold here for approximately 2 months, and we're seeing a ricocheting at the moment between support and resistance. So each time so far we are coming back towards that resistance level between 1,740 to $1,755 per ounce. So far we've had failed breakouts at that level. As we go into next week, I would be mindful of the following. We want to see whether off the open, if gold can break above all of this resistance. We've got a very clear neckline and also a head and shoulders pattern here as well. We can see the left shoulder, the head, the right shoulder. So we want to see whether gold can clear above this neckline. Now, this is going to be a FOMO region for traders, okay? If we do get a break above this level, be mindful that we may get some bull traps at this zone, and it is more common at the start of the week on Monday and Tuesday to see counterflow as we go into the London session in the morning. So be aware of that. If we do see a push higher of the Sunday open into the Asia Pacific session, be mindful that it's possible in the morning you may get a pullback and a retracement if we do break above this key level of resistance, especially if you gap higher off the open here for gold. This is where it has the potential to pull back. Now, it's possible that we don't get any sort of a gap and we very simply hold at resistance, and from here we then consolidate again at the beginning of the week, and this is where we'll look at opportunities again to buy into dips here on gold. As you know, we've been taking advantage of all of the dips here throughout the last couple of months. Each time we're seeing these significant sell-offs on gold. The latest position we got was at 1687. We banked again profits of $1,740 per ounce on Friday for 530 points. We're taking advantage of these pullbacks in price, and I mentioned to you as well, at the beginning of last week, many traders got caught on the wrong side of this move. So 100% technical traders who are not paying attention to the macroeconomic data in the market. They're not looking at what the Fed are doing in terms of stimulus and support that's been provided to the market, where we saw that announcement from the Federal Reserve later on Monday, which immediately reversed the course of gold there, where it broke out. So many traders, again, looking to sell short gold, were trapped in their sell shorts. We've subsequently seen a breakout and a squeeze of those positions. We know hedge hedge funds and money managers have yet again also increased their net long positions. The weekly picture, we've got a consolidation here for gold and also a bull flag which is brewing, which I'm looking for a breakout above these levels in the coming weeks here on the weekly chart this is. So I'm looking at more upside and a move back towards those 1800 target essentially is the next major level here for gold. But again, you need to be very savvy to the price action here. The daily cycle for gold, the weekly cycle, and where we're at in terms of the monthly cycle as well. Bear in mind, going into next week and the following week, it's going to be the end of the quarter. Hence, you're very likely to see some profit taking as we go into the beginning of July. And you want to look at those profit taking pullbacks on gold as opportunities to then build further positions. Obviously, the lower the price goes, the better the potential entry and the risk to reward. So this is our plan going into next week. We want to see if we will get any of this counterflow going into next week. We may well gap higher on the open. We could even push higher on Monday as well, but we're looking at pullbacks as buy opportunities. We continue to establish positions on gold on these pullbacks. And I'll bring your attention over to silver as well. So silver at the moment, we've continued to consolidate, building lower highs and lower lows. But again, we look like we are building into a bull flag here with silver. Now, I mentioned it previously that usually over the month of June, gold outperforms silver, and then as we go into July, silver outperforms gold. So look out for this. We're consolidating at the moment, but if we can get a break above the neckline here, break back above $18 per ounce, this is where we're very likely start to move towards that Goldman Sachs target of $19 per ounce, and above that, much higher targets, $21 per ounce, and then $23 per ounce, and then you're going to be taking out the 7-year highs there for silver. So silver's absolutely a market you need to have on your radar at the moment. The gold-silver ratio, in fact, towards the end of last week did start to roll over and pull back, which is providing further support again to gold and silver. Right now, these markets have been range-bound. They've been pulling back, especially silver, after it had a 25% increase to the upside over the month of May, which was absolutely phenomenal. We've subsequently seen a pullback here over the last 2 or 3 weeks, and now is setting up for a potential move higher as we transition into July. So absolutely have silver on the radar here too as we go into next week. And then transitioning over to crude oil here, you can see where the range recently on crude oil has maintained resistance here at approximately $40 per barrel, and we have support coming in as well just below $35 per barrel. We continue to ricochet between these zones. Hedge funds and money managers, they did trim their overall net long position in the latest week, and we have started to see a downtick here on Friday on global equity markets, with the S&P 500 closing negative by 1.8% on Friday. I would watch out for these intermarket correlations. If we do start to observe more selling pressure on equities going into next week, you could then look at more pressure to the downside for crude oil. You've also got fears about a second wave of COVID-19. We've seen increases in the amount of cases go up exponentially recently in the US and also in South America. Globally, we've seen additional measures be instigated in the last week. Beijing, of course, being a great example where hotspots have started to pop up and they've had to go into lockdown in Beijing. And this is all providing some negative sentiment to global equity markets and having that knock-on effect as well with crude oil, where we're seeing a retracement here on Friday. I would watch out going to next week for the API data on Tuesday, Wednesday's oil inventories data. Be mindful that hedge funds have started to trim their net long positions, and ultimately I'm looking for a confirmation on oil here on whether it's starting to turn. So is this going to develop into a bear flag and start to make a move back down towards the lower end of the channel, providing sell short opportunities back towards that $34 per barrel zone, or is oil going to be able to break out above $40 per barrel and make a move to fill the gap that we had back in March from the oil price war? So I would keep a very close eye on those levels as we go into next week. And of course, as I mentioned with gold here, we're at a very critical level going into next week. And typically the end of June, the last week of June, can really see some very significant gains for gold. But be aware that we could still have counterflow at the beginning of next week. There is some positive sentiment going into gold here into the close as a result of the revised estimates from Goldman Sachs, which is, again, they're looking for $1,800 per ounce for gold over the next 3 months, $1,900 per ounce for gold over the next 6 months, and $2,000 per ounce for gold over the next 12 months. So with that, if you would like to learn a research-driven approach to the markets where you are taking into account macroeconomic data, you're also utilizing cycles, market flow, what the hedge funds and money managers are doing in the market versus the retail traders that are using their 100% technical technical analysis or their trading strategies that simply will not work in these market conditions. If you've been trading a very specific strategy over 2019 or 2018, which is no longer working, it's because technicals alone will not work in these market conditions. They're not going to give you any sort of an edge. You want to be utilizing market intelligence data, seasonal cycles, macroeconomic data, or in-house intelligence, and then marry that up with the positioning from the funds, from the institutions. This is what will really help you to improve. If you want to upgrade your income, you've got to upgrade your skills. And right now, as we go through the next 6 months and what we're seeing developing in the markets, there really never has been a better opportunity to get started on this journey, to learn a research-driven approach and make sure that you capitalize on what we're going to see over the next 6 months. Goldman Sachs have just put out those bullish forecasts on Friday, and you definitely don't want to be regretting this in 6 months that you didn't take action. So if you would like to join a community of successful traders, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You have access to our real-time trade alerts, trading research and market insights, access to our private members academy website, and also support and one-to-one mentoring. For more information, please just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.